Is this thing on?
Yesterday's price is not today's price.
Hey, what's up? I just wrapped up a podcast with Shruti Lanka of Public.com. I'm a big fan of this company because they rely on creators and their audiences to help create, compelling events to trade within your portfolio, which I think is neat. And when we spoke about what makes a good CFO versus a great CFO, one of the things that Shruti was immediate to call out is a CFO's understanding of product. And so a lot of CFOs will stay in their CFO box. I'm the finance guy, I'm the back office guy. But she explained that even if you're not verbally saying it in the meeting, when the CEO gets a question from an investor or a potential customer, you should be able to answer pretty much anything, even if you're just going through mental reps in your head like you're the backup quarterback. And she understood the product from soup to nuts. I thought it was incredible how much she knew about the product's design, the product's conversion rates, what customers are asking for. Like, she was super in tune to the product. So enjoy this convo with me and Shruti. But before we get into that, I'm going to go off the books for a second. And exciting, this is our first ever mailbag segment. I'm like imagining like there's noises behind me going on like mailbag, mailbag, mailbag. We'll see if producer Nancy puts that in or makes me sound like a total fool just saying that out loud with nothing. First question we've got for the mailbag. So they said, "Hi, Carl." So somehow they knew my government name. I don't know who told them that, but it's an insider info here. Thank you for sending over part 4 of the planning guide. I have a question where I would like to get your view on. When it comes to COGS, you outline the following. That's cost of goods sold. Generally, 33% people. So that's customer support, your break fix, and your customer success, adoption upsell, if those people do not have a quota. 33% tools or data. So that could be, support tools like Ask Nicely, Zendesk, Churn Zero, and then 30% hosting or infrastructure. So that's the likes of AWS, GCP, Snowflake. The question is, what's your view on engineers who maintain infrastructure? From an operational perspective, I want to know so that I don't kid myself when scaling the company. However, it can obviously put a significant pressure on your gross margin. My engineers work on the following stuff on the infra: support specific customer requests, maintain the code, fix bugs, etc., do security updates. Would you allocate these into gross margin? And in your experience, how does the market allocate it? This is a spicy one for all you gross margin fans out there. If I was being 100% academically honest with you, I would break them out and put them in COGS too. But like the reader pointed out, it's going to totally put undue pressure on your gross margin. And in my first FP&A role ever, I came to like the same conclusion this reader did. And I thought I was doing us a favor by putting it in the right spot. I remember specifically, I put 7 engineers into COGS. And then my CFO was like, whoa, put that back. And I had to put it back in OpEx. And I was like, well, isn't that the right spot? Because like this is where we're maintaining our product. It's like our ongoing cost to serve and make customers successful. And the way my CFO explained it to me was like, no investor would ever force us to actually put it there. Like, we can get away with putting in R&D. So maybe it's not the most honest thing to do that, but it's something that you can get away with, I'll say. I think though, like, it comes up more often once you cross that 100 million in revenue line of demarcation, you could call it. And there are more clear reporting hierarchies where it's easier to split out people who just work on infra all day. It takes a while for you to get to the point where you have someone whose like only job is to manage your GCP spend. But when you do get to that point, it's a more obvious trade-off of where you should put them. And it's easier actually for the accountants to put it there so the FP&A people can talk about it in the right spot. And if I'm looking at the market, because it's always important to benchmark what the rest of the market is, the market does not usually allocate it to COGS. They're always trying to slip one by the financial analyst goalie here. And I actually see them do the opposite. And what the market will often do is they'll take their AWS or GCP spend and they'll actually claim that 10% of it is for development. They'll say, hey, that's not the production to serve our customers. That's actually for development of new products. So I'm actually going to take that out of hosting or out of my gross margin and put that down in R&D to further reduce the burden on gross margin. So that was our first ever mailbag question. I hope you enjoyed going into the deep, dark arts of gross margin. And I'm here with Shruti Lanka, the CFO of Public.com. Thanks so much for carving out time for us, Shruti.
Hey, thank you so much for having me. Great to be here.
So the first topic I wanted to dive into is the partnership between a CFO and a CEO. And I know that this is probably something that you've given a lot of thought to in your current role. So how do you think about how a CFO and CEO should interact on a daily basis, and kind of what's the cornerstone of that partnership?
Yeah, it is something I think about a lot. And I think it is something that evolves as the company changes, as it goes through various stages, right? But really, in startups where more than all of that, the thing that matters is running the business effectively and knowing you're making the right decisions for the future. I think the number one thing is making sure that you're on the same page always about the key numbers and metrics that matter to the business. And this seems like, oh, that's obvious, right? But I think you know, CJ, that there are honestly so many different ways to go at any given point, right? Do you care most about the users? Do you care about revenues? Do you care about top of the funnel, bottom of the funnel? How do you calculate payback? Is runway more important? Is revenue more important? And honestly, those answers really change based on where you are in the company's life cycle, the macro cycle, and a number of those things. And so I think there's a few simple hacks that I've used to make sure we're on the same page, which is, once a week, we're looking at the exact same numbers. My team sends out a report about exactly what the business is doing, not just from a cash perspective, right? Here's our cash balances, here's runway, here's the whole balance sheet view, but also like revenue, users, paybacks, the whole thing. So once a week, at least, we're looking at all of the same set of numbers. Then once a month, we come together to talk about strategic things that are beyond the day-to-day that may be falling through the cracks.
A lot to dig into there. And I kind of want to separate this into two parts. So kind of the communication and responsibilities with your investors, because I know that's a tricky thing to manage as a CFO with the CEO. And then also the metrics part, which we can dive into in a second. And I'm a huge metrics dork, so excited for that. So
love data, throw it my way.
We got a lot of data questions for you. So how should a CFO and a CEO split up the communication with the board to make sure you're on the same page? How do you manage kind of that?
I mean, the answer is there's always a background conversation. You must always be on the same page with your CEO, right? There should be no surprises really in that relationship. I mean, you're managing the board together, but really on, major like company priorities, like what are we building, roadmap, product, people. I like to think that the board really looks to the CEO for those answers. Typically, the finance domain, I find that usually the board defers to and the team as well defers to the CFO. And I think it's a pretty clean division of responsibilities actually from a board management perspective between CFO and CEO. But the answer always is, have that pre-conversation, whether it's the board meeting or a simple email.
That makes a lot of sense. And then in terms of the metrics that you review with your CEO on an ongoing basis, how often do you come up with that list of metrics?
That's an excellent question. Especially in a business like ours where things do change quite a bit, right? Honestly, even a year is a really long time. This is a second by second business. I think it depends on what the metric is. Things that are leading indicators for the business, you should really be checking every day. And so we talk about those honestly all the time. There is no set time to say, is this the right thing we're looking at? Because we're discussing these things all the time. It almost evolves naturally. But for lagging indicators, I mean, things like paybacks, LTVs, etc., I would say on a quarterly basis, we step back and say, are we calculating this the right way? Like, do we have the right items just in this calculation? And what should go in or out? How will it change with new products, etc.?
Yeah. There's a saying that I like to go back to is beware of all green dashboards. I find sometimes that teams tend to put the metrics that they're most comfortable with explaining. To your point, how do we define this? What goes into it? But sometimes when a metric is either trending in the wrong way or it's, harder, takes more time to explain it and wrap your head around it, it may kind of hit the back burner.
It's a really good point. I mean, this is why I think like we have an automated system that sends out, there's no people putting together decks so that we're all looking at the same thing and it's the truth, whether it's good or bad. And then, we go from there. So having the right reporting and frequency of reporting as well as delivery of that reporting, I think makes a difference. Small things make a difference in these things.
And maybe to drill into that, you do come from a deep data background, and I'm curious why you think the marriage between data and finances is so important.
Yeah, I mean, this is something I love talking about, as you may know. I honestly really think that the finance teams of the future are going to be indistinguishable from like data analysts or data teams, and it's simply because this pace of decision making has become essentially now. I will also caveat this by saying this is more applicable to startups really than more public companies. I think the larger you get, the more time you have to, you can look at reports quarterly, monthly, or weekly. But in a startup, you just honestly don't have that time. You make a decision daily. So if you're making daily decisions on a monthly accounting close, cannot really weigh into that decision, right? It just takes too long to get the information you need. It's month end, then it takes, with a great team, it takes 5 days to close. With not a great team, it takes 15 days to close. So you have financials at the end of the following month. That's not, useful. So how do you get information before, not after the close of a month? The only way to do it is to ensure there's seamless interaction between data and finance, and which I'm really proud to say we have at Public. And you can see, down to a user level, revenue and gross profit. And our product managers, our operations team, our customer support team uses that information to make better decisions for their customers. And that marriage allows us to serve the users that are most valuable to the company best.
I've struggled in the past with who owns what type of data. So, for example, things that end up on the P&L like GAAP revenue or costs may roll up to the FP&A team in terms of responsibilities, but then you kind of get in this middle ground if you have a sales ops team where they're managing things from Salesforce and anything that's an opportunity related. So how do you frame up data ownership at Public?
For one, we draw a very distinct line between production data that goes out to customers, which lives entirely within the engineering team. Right, that is what is used. Like we're talking about like market data. There's so many pieces. There's a massive amount of information in an investment platform like Public. Right, we are just dealing with a volume of data that perhaps some B2B companies don't. So we draw a clean distinction between production and consumer-facing data and our data warehouse, which is really meant for optimization of our internal products and tools. And all of that optimization data lives really within the finance and data team. So we have a single data warehouse that pulls from every single one of our sources, whether it's marketing data. We have companies like Segment that helps us pull marketing data in, whether it's our own production data, or obviously our proprietary tables, etc., but also other external data, from our customer service tool, which is Intercom, etc. Bringing all of those pieces of data together is, I think, actually kind of the promised land for such projects. And the reason why we're able to be successful with it is that honestly we started early, when the company was only a year out at the time, and we already started building out the warehouse. And so it evolved as the company evolved.
Hey, thanks for listening. We'll be right back after a word from our sponsors. If you're a startup founder or executive running a growing business, you know that as you scale, your systems break down and the cracks start to show. If this resonates with you, there are 3 numbers you need to know: 36,000, 25, and 1. 36,000. That's the number of businesses which have upgraded to NetSuite by Oracle. NetSuite is the #1 cloud financial system, streamlining accounting, financial management, inventory, HR, and more. 25. NetSuite turns 25 this year. That's 25 years of helping businesses do more with less, close their books in days, not weeks, and drive down costs. 1. Because your business is one of a kind, so you get a customized solution for all of your KPIs in one efficient system with one source of truth. Manage risk, get reliable forecasts, and improve margins. Everything you need all in one place. Right now, download NetSuite's popular KPI checklist designed to give you consistently excellent performance, absolutely free at netsuite.com/metrics. That's netsuite.com/metrics to get your own KPI checklist. netsuite.com/metrics. I love how you have a data first mindset, and it seems like you're very much like a first order thinker and framework thinker. Do you have any frameworks that you like to incorporate with your team when you're making decisions day to day?
Well, my favorite one is correlation is not causation.
I love that
Right?
line.
That's the one I use honestly the most because, as you can imagine, in the markets, there's a lot of correlation. And so we try to get to the root of the answer. Can we actually establish causality? And in some cases, we simply can't. And it's just important to know that.
And this is, maybe an antithetical one to ask to someone who's obsessed with data, but can you think of any times where you actually ignored something the data was telling you and went with maybe a gut feeling?
Yeah, I mean, honestly, all the time when we launch a new product, right? In the fullness of time, like every investment platform is likely to have a similar looking set of products, right? But the key thing is, what do we launch when? Now, if you looked at all the data going into 2022, we were coming off like the hottest rally of crypto. There was GameStop, then there was crypto, right? Then there was NFTs and alternative assets. So all the data would have told us to launch like more speculative assets or more trading assets, right? Push into futures or commodities or some such thing. But it was also a time when the Fed raised interest rates faster than anyone would have predicted. And there's nothing that would have told you that it would have gone down the way it did. And so in reacting to that, the team got together and we decided to launch treasuries. And where Public is today, one of the only platforms in the country, the only platform really, where you can buy US treasuries with 2 clicks, right? And no amount of data would have told us to do that. It was just looking at what the consumer was likely to need going into the next year, right? That has been one of our most successful product launches.
And I'm no Ben Bernanke here, but treasuries is pretty much the opposite risk profile as something like crypto, which it seemed like the market was probably giving you data to say to push towards.
Yes, exactly, right? But you have to evolve to the changing nature of the market, and looking at this as just the data doesn't always give you the answer. Really, the answer should always start from what does the customer need, right? And often what does the customer need is something that's much more intuitive than it is really hard database, right? Like it's qualitative, it's based on really knowing who you're serving. And the customers wanted yield to combat the inflation that came shortly after those rising interest rates, right? And we're pushing further into yield products because that has performed for us, and so more to come without disclosing too much.
It sounds like in that decision, the data was telling you one thing, but you're kind of weighing a long-term vision versus a short-term vision in the moment.
Yeah, absolutely. And I have to bring it back to the customer, right? One of the things that Public has taught me and does really well is a true customer obsession, and first thinking about how do we align incentives with the customer and what does the customer need in this time, right? And so if you triangulate on those two things, which is absolutely what is our long-term vision to make the public markets work for all people, and what do the people need now, right? Those two things came together. And so I often say data is an optimization play, not product launch play. From 0 to 1, you need the right intuition and the right vision and the right product roadmap. But from 1 to 100, that's where the daily optimization, the A/B testing, the integration of data into product is extremely key. So you need to know when not to use the data in addition to when to use the data.
Some companies will chase what they think the data is telling them before they have product market fit for something.
Oh, absolutely. I think that's extremely true. I mean, it tends to happen when you start with a product versus start with a customer, right? You're like, this sounds like a great idea and this must exist. And if it was priced this way, it would make a lot of money and it would be this but does the customer even need the product you're offering?
Something that's very apparent just from talking to you for this short while is that even though you're a CFO, you understand the product pretty intimately. You understand the customer extremely well. And I'm wondering if that's a quality that you think separates a good CFO from a great CFO. What are the qualities that you think delineates the two? And do you think, understanding the product at that level is something that separates the good from the great?
Yeah, it's a great question, CJ. I think I have the benefit of honestly having spent my entire career in fintech, which is a little bit different than others, right?
Sure.
And frankly, I think there are a lot of great CFOs who work at companies that don't serve them. I'm also lucky that Public serves me, right? It is my primary investment platform. I use it every day, and I love the markets. I think that may not always be the case, but I will say what is true and what I have found to be true of great CFOs, especially the mentors and the people who have been helpful to me along the way. Absolutely, they have an extremely deep understanding of the product and operations. And in fact, they often do more than just finance. Either they run the operations or they have an experience in product or some different part of the organization. They tend to come from at least having a stint outside of finance, so they have a deeper understanding of the organization overall.
I love that. I think getting out of your finance bubble is extremely important to know how other groups function and also to know the questions to ask of the department leaders kind of when you're in that finance chair finally.
Yeah, absolutely. And to empathize, right? Again, it's honestly easy to start with the spreadsheet.
It feels a lot safer to sit behind your spreadsheet.
Yes, absolutely. Right. And it's definitely a hard skill to master and you have to be accurate in it. But you could easily look at these numbers and say, oh, well, if we change the price of the product, this would increase the margins by X%. And so why don't we just do that?
Yeah.
So I think empathy for actually selling the product is key. And that comes from spending a little bit of time outside of the finance bubble, like you said. One of the things that a partner actually told me is the CFO actually has permission to sit and should have permission to sit in on any meeting they want within the company.
Can you go deeper on that? That's really good.
Yeah. In any company, the CFO should establish that they can sit in on pretty much any meeting in the company. And the reason for that is there is no product decision or engineering decision or operations decision, which is outside the remit of the CFO's role, right? Because you cannot represent the company both in a financial model as well as to investors internally and externally accurately without really knowing the bones of it. And how do you get to know the bones of it? You need to know how the decisions are being made across the org. And so what I would tell other CFOs is to actually do it. After a time, even when you're comfortable in this role, go sit in on that product meeting. Listen to how prioritization is being done. Listen to how the customer is being served. Listen to how your customer support team is interacting with customers. It changes all the time, and so it's not just when you join, but do it all the time.
And so I want to do that. I want to be more embedded into different departments in the org. How do I do that without looking like I'm the police?
Yeah, it's an excellent question. I think it comes down to relationships, right? If you have relationships across the org where you're not, the person to say no all the time, and you know who you can sit with, who is not going to be intimidated by your title, that's the meeting that you should be in, right? But it's really important to know people across the org, up and down levels, talk to everyone you can, right? This role, as you know, CJ, has to come with humility, because at the end of the day, you're representing a business that others are, building and running, and you're working on ensuring accurate representation of a complex machine into a set of numbers, right? And so if taking that into the room helps, but certainly you want to make sure you're in a room where they're going to stop talking with the CFOs in the room. So it needs to be a meeting where people will continue to do their job. And the way to do that, by the way, I want to be clear, is you only have the right to be listen only in these contexts. You don't get to weigh in and say, change that decision, right? Listen only, you can be part of many decisions across the org.
That's amazing. It actually helps me a lot in my current role too. I'm a first time CFO. I just hit my 1 year cliff yesterday, and I'm trying to balance the role is telling the truth with the numbers, even when it makes people look bad, versus trying to get out into the org. And I kind of think about it as almost like a backup quarterback to the CEO in a lot of ways. I don't know if that's an accurate description, but I'm trying to always go through mental reps too when a question gets thrown at the CEO, as if, how would I answer that? Even if I know it's not my job to actually speak up and verbally say something.
Yeah.
And you had hit on that earlier about a good CFO or a great CFO should be able to answer basically any question about the org, even if you're not the one giving the answer.
Yeah, absolutely. You should be able to pitch the company, to the moon and back, right? Or take questions on any single aspect. The thing I'll tell you, CJ, as you think about embedding with yourself within the company or feel like you have to tell the truth, if you feel like there's a disconnect between what the model is saying or the numbers are saying and what the team is working on, take a good hard look at whether your model is right. Because there are so many different ways to think about the same problem. I can give you an example, right? We were running a model at one point which was based on CACs, essentially. You take a marketing budget, you look at the number of users, and then you look at how many users and what is the cost of the user you're acquiring, right? It turns out that was actually not the right way to think about how we were bringing users onto the platform. It was better to think about it in terms of their actions immediately after they joined. We needed to think about, were they transferring assets? How much assets were they transferring? And what was the cost of bringing on those assets, right? And so are you sure you're using the right metric is a question I would ask any CFO who feels like they're out of sync with their org.
I like how you kind of pointed out that sometimes you'll have a modeling problem or a budgeting problem, and it's not the org's fault that something's going wrong. It's that you and your model don't accurately reflect reality.
Yeah. I mean, that may not always be the case.
Yeah,
right? But I think it's important to also remember that, it's a partnership, right? And so I have found that going back to, is this the right equation for this org, usually answers the question.
As a CFO, sometimes I struggle with how much I should get over my skis in terms of commenting on org structure. Is that something that from day one you feel comfortable saying because 70% of the costs are people that you kind of give an opinion on? Or how comfortable should a CFO be about org structure?
It's a hard one. It really depends. One, I would say there's many ways to benchmark that. And I would do that, right? The market is your friend. There are lots of CFO resource groups. So I think benchmarking various parts of your org and always thinking about it as ROI, right? How can you put an ROI to whatever you're talking about, whether it's, a pod that's working on a certain problem. What is the payback of the investment that we're making? How long will we make that money back? Thinking about everything in terms of payback, but just slicing it various different ways is something that has worked for me.
It's at the end of the day, it's all about payback.
Yeah, it is really the queen metric or king metric of startups.
I'm curious, what do you think are some of the biggest differences, just to kind of bring the two topics together, of being a CFO of this type of business model at Public versus a CFO of maybe a traditional SaaS company? Are there different metrics you look at? Are there different frameworks you have to take to run the business day to day?
I think the answer necessarily has to be yes, right? In a typical software company, you're growth is sales driven,
Mm.
right? You have a sales org. And so when you have sales driven growth, your key stakeholder, in addition to the CEO, is probably the CRO, the chief revenue officer, right? You work super closely with that team to know, are we getting the forecasting right? Like, are we even thinking about this the right way? Are we going after the right targets? What does conversion look like, et cetera, right? And so the two key stakeholders in that equation become the CRO and the CEO. And a lot of the inputs really are based on people. So you need an extremely strong partnership up and down the sales org. If you now talk about our business model, which is a consumer business, what is most important is one, capturing all the data and looking at it consistently. Once you actually have all the data, there's much less like personnel input. Like, I actually don't really need to talk to the marketing team to know, how are we performing on, on CACs, right? Like, the data speaks for itself, which certainly makes it easier in some ways, but in other ways, it can change every day, right? Like, consumers, you need to focus not only on acquisition but also retention, and do that every day. So from that perspective, the things you're focused on are different, because in addition to looking at CAC, ARPU, payback, you're looking at retention, churn across various D1, D30, D90, and then 1 year, etc.
That's an incredible answer. And those are so many different flavors of retention. Would you say retention is one of the top 3 metrics that you look at day to day at Public?
I look at it frequently, but I also say it's one of our strongest. And so that's one of the things that kind of sets us apart relative to other peers. But yeah, in addition to all these other metrics, I look at all of the metrics every day.
Hard one. If you could only choose one cut of retention, which retention metric would you look at to best understand the business's health?
D90.
D90. So can you explain that one for me?
Yeah, I think it's a good indicator of longer term retention, right? Lifetime for us is not measured in weeks or months, it's years. Because if you're serving your customer well, people don't switch their investment platform all the time, right? Our implied lifetimes are in the double digits in years, but the best predictor of that tends to be the D90.
So if you were a first-time CEO, putting yourself in those shoes, and you're looking to hire maybe your first CFO, what do you think the number one quality you would look for or interview for would be?
Honestly, the most important thing is really the trust and partnership, which we kind of talked about upfront. It is a little bit difficult to interview for that. It is a does it work type of situation. I mean, honestly, this is why I'm such a big proponent of in-person work. I'm in the office 4 days a week because I think humans are biological creatures. We like, being around the people that we work with, and it really helps to build that trust and relationship. So I think the most important thing is a little bit hard to interview for. But outside of that, I think it is truly like, are you able to put numbers around things that don't obviously have numbers, right? Can you drive quantitative decision making in situations which may feel like somewhat opaque otherwise, right? Because as we go along the way, particularly, you have a limited amount of resources, which is your cash balance, and you're putting it towards a number of different projects. Now, the question always is, well, this project or that project, right? This product or that product, this marketing. And in many of those cases, it's really difficult to reduce something that hasn't launched, that may not have a market, that may be completely new. It's hard to reduce it down to a set of numbers, right? But if you have that skill, I think that is the most valuable counterpoint to a CEO's vision.
So it's taking something that's qualitative and making it quantitative in a way?
Yeah, and being able to go back and forth between the two, and also recognize that the numbers, you may not be right. And so then the third one I would add is like scenario planning, which is key, which is, what if the numbers that I just put on the table are completely wrong? Then what happens, right? So playing out scenarios, that's the third skill.
Let's dig into that. And maybe just to frame it up, I'm wondering how you deal with situations where you are wrong, even if the decision was right at the time. and you put something on the table in front of either the board or the CEO, what's the path to presenting that and kind of rectifying it?
I would say every forecast is wrong, right?
Yeah.
There's never a perfect forecast. Now, the question is it directionally correct? Is it correct enough that you feel like you still made the right business decisions? And even if it's wrong on some things, does it, work out on average overall? Like one product did worse, but the other one did better. But generally, growth is trending in the right direction, et cetera, right? But every forecast is wrong, which is exactly why I think as a CFO, in an environment with massive uncertainty, which we're still in, but seem to be coming out of, you need to present options. You need to say, this is the range of outcomes. And as long as we're above this, we're in the clear, right?
Yep.
And so talking in absolutes is tricky and frankly, just inaccurate.
And to get tactical and scenario planning, I love this stuff. How do you look at the different scenarios? Do you do like a worst case, base case, best case? How do you frame that up?
In our business, we have some macro exposure, right? Public is
Totally.
an investment platform. Now we have honestly products for every part of the cycle, which is part of the beauty of our business model, right? In times where interest rates are high, our customers take yield products. They're more interested in treasuries. But in times where interest rates are low, people trade more. This is, established. And so they tend to, trade more stocks and maybe trade some crypto, et cetera. So the question becomes, what is coming up? Who knows? Who knows what 2024 holds? But we lay out usually scenarios based on where we think the markets will be and where we think interest rates will be. If interest rates are high, these are the businesses that perform well. If interest rates are low, these are the businesses that perform well. So 3 scenarios with a mixture of those things. So it's a little less low, medium, high, but it is more, here are the key inputs and here's how they interact to generate certain outputs.
And, I'm coming from a traditional SaaS background, and a lot of times I'm forecasting more the execution risk of our sales team to be able to go out and sell things.
Yes.
You have so much macro exposure that you're also looking at, the best case, worst case, base case for the economy as well. I imagine that's a whole nother wrench that it throws in your forecasting.
Yeah, I mean, I don't know which is the harder wrench because in some ways, no one controls the macro. But when you're dealing with people and frankly with consumer businesses, our funnel is, best in class. We know this because we can test it and we have massive number of data points. It takes us a day to know whether something's going wrong in our marketing funnel. Whereas in B2B businesses, it can take you some time to know something's going wrong in your sales funnel, right?
Yeah.
It shows up, like delays take time to show up and you need to capture the data. So there's pros and cons in both models. In some ways, consumers easier, but in some ways it's harder too because of macro exposure.
When you set out to model, are you modeling in the impact of what you think the economy will be, which is incredibly hard to predict? And then how do you separate that from modeling how the business will execute? Because they're kind of two different buckets of risk that you're almost trying to put on one piece of paper and one operating plan.
Yep. I think it is to just be very conservative in macro assumptions because nothing else is really justifiable, right? You cannot put a model out that says the market is going to go up 10, 15% in a year. That is like, nobody knows, right? So use conservative assumptions on macro, but then make it really clear how the business works beyond that, right? Mm-hmm. So having extreme clarity on how that affects the business model. And then again, like I said, presenting the range of outcomes just allows you to paint a clearer picture.
I love that. Maybe transitioning a bit, just getting into your personal background and how it helped you to get to where you are today. I was going through your LinkedIn profile and you have a really impressive background when it comes to giving back and mentorship. And I'm wondering if mentorship played a big role into getting you to where you are today.
Oh, absolutely, CJ. I mean, I started out an engineer, right, to end up in finance as someone, my whole family is engineers. The reason why I'm at Public and doing the job I'm doing is simply because my family, super smart engineers, lost a ton of money in the stock market to a rogue broker who put them in a series of bad trades, which I know now were extraordinarily risky, but honestly, no one knew at the time. And that's when I realized like smart people don't know anything about money. You know, I mean, my mom worked on literally building like defense helicopters. She has a master's degree in
It's a
electronics,
smart woman.
and yes, and did not know enough not to trust the trader, right? And that set me down a path of wanting to learn more about finance, but I came from a world where I really didn't know much about it. Really, most of the people I knew were scientists or engineers. And so I had a number of mentors along the way. Devin Rich, who hired me into RBC, and Rick Correa, who's now the CFO of Moneyline, still the CFO of Moneyline, who hired me into Moneyline. People who sent me along the way to, really excel in a completely new field.
So do you feel like they kind of took a shot on you?
Oh, absolutely. I think it is always helpful to have some quantitative background. So I think they actually liked the engineering background because, like you said, it allows you to put frameworks around decisions. And so system-based thinking is helpful to building companies. So they absolutely did, because in both of those cases, I was starting something new, right? It was the first time I was entering investment banking when Devin hired me. It was the first time I was entering startups when Rick hired me. And they absolutely took a shot on me.
And it feels good when somebody sees something in yourself that you may not have seen on your own.
Yeah, absolutely. And I think this is one of our kind of manager values as well, right? Like a good manager sees potential in you before you do
I like that.
and takes a bet on an outcome. And this is what I love doing for the people on my team, which is why many people on my team get promoted over time. And we have a super high retention rate on our team, which I'm very proud of. It's because, I think everyone is in a stretch role. And I think that's exactly how it should be for ambitious young people who want to do more than the paper resume says.
What are some of the indicators that you see in people when you think that they're ready to take on more? Is it something where they're coming up to you and asking for more, or you see the fire in their eyes? How do you know that this is a person that I want to take a shot on? Is it maybe you're seeing a little bit of yourself in them?
I'm very blessed to have a team that's way smarter than me. And this is actually one of the advice that a mentor gave me, which is hire people that scare you. And I think it's such a great piece of advice, because truly, when you have people on your team who you feel like you don't really know the limit of their abilities, that's the kind of person you want to hire. It's such a joy to have so many people on my team who are like that. But to answer your question, how do you know when people are ready for more? It's this, right? Like they don't even know truly where the job ends. They take so much ownership of their work. They're coming, they're doing this, they're coming up with new ideas. They've solved something along the way. They've talked to like two people and they're like, okay, so I saw this and then I talked to a few people and then I worked on it. And here are three options. So what do you think we should do? Right. And they don't even wait for me to say, okay, can you chase this down? Right. They see something and they go after it and they don't feel like it's not their job to find an answer.
I'm going to say a statement and I want you to react to it. Hire someone who wants to take your job.
Absolutely. I mean, the answer to that is absolutely yes. I hire extremely ambitious people. And, I was that person, right?
Right.
In my mind, that's an obvious answer, right? Because you want people who want to do more and take on more and do it naturally.
That's awesome. What's your approach to giving advice to people?
Honestly, I think it is not to give too much advice. People usually cannot really take more than one really meaningful input, right? Maybe one, maybe two. But frankly, like when you've spent a few years in the industry and you, especially in your role, CJ, you see so many people, you get so many different inputs that honestly, you probably have a wide variety of inputs to give someone who's starting out. So it's almost what is most relevant now versus what is all relevant, right? So I try to give little advice, maybe one or two things, with the hope that they keep it And I think that does work because they tend to come back for more. I think that's the sign.
I was an amateur boxer when I was younger. I wasn't the best in the world, but I can still take a punch. And my coach used to say that in between rounds, I'll give you one thing, maybe two, but if I give you 6 or 7, it's pretty much the same thing as me giving you nothing.
Right, exactly. I mean, sport I have a lot of respect for. I think in life maybe people can take more than one thing. At that point I completely agree. But I think that is advice that applies everywhere. Maybe even now for me, right? When I reach out to my mentors, it's highly topical. And candidly, they stay on topic as well because they know that if I'm dealing with a situation, that's the thing that's top of my mind. They can tell me 2 other things, but I wouldn't even absorb it.
I know you have a family and a baby. How do you possibly balance that with CFO life? I have a lot of discussions with my wife because she's a woman in tech. She's had one kid now, and we have another one on the way. And it was a lot easier for me to go and tell my boss, hey, I'm having a second kid. I'm probably going to take a couple of weeks off. She's actually been really nervous about telling her boss. And she's trying to plan it around actually her promotion cycle because she's actually a little bit worried about telling them that she's going to take time off. As a woman in tech, like how do you balance the responsibility of being a mother with a young child? And then also, it's a lot of hours to work too.
I think the concept of balance is dead. Like I actually don't think it ever existed. Like I think balance implies that the two things are at odds, right? Like one versus the other.
Yeah.
Whereas in reality, my life is like a jigsaw puzzle of home and work.
Gotcha.
And both kind of fit into each other, right? So can you make the two pieces fit is the question that we should all be asking ourselves. And the way for me those two pieces fit is that I'm always home for dinner time with my baby. I often put her to bed, or maybe my husband is, but we do dinner together and then I go back to work, right? Like sometimes I jump back online, and some days that's just not possible. I have a client dinner or whatever, and I'm not able to make it. And so sometimes in that jigsaw puzzle, work fills it 80% and home is 20%. But sometimes I need to take the dog to the vet and, the baby to the doctor, which happened last week, and the home takes a larger. So I like to think of it as a jigsaw puzzle, and as long as it's like roughly even, which for me it is because I think public's a great employer, you're in a good place. And I think like if you love what you do, they are not at odds, which is exactly what you said. So you just spend time on the things that is most urgent at that point, and then you take care of the rest.
All right, to transition a bit here, I wanted to move into what we call our long-ass lightning round, where I'm going to hit you with a couple of quick questions. So the first one I wanted to ask you was, people tend to think of CFOs as quite polished and perfect, but I'm curious, can you give us an example of something you may have screwed up in the past on the job?
Oh my God, so many. I can think of a time that this was in a previous job, not the current one. In an M&A transaction, there are project names, you carefully manage data rooms, you keep like processes separate, etc. We were down to 2 final parties, and I sent basically the materials from one party to the other. And so it became clear to the other party who the other bidder was. But luckily in that instance, it fired them up even more to beat them. And so it ended up, resulting in still a positive outcome for the business. But that's a huge no-no.
It's so funny you said that. So we interviewed Michael from Brex, the CFO there, and he said the exact same thing. He, as an investment banker, he accidentally uploaded like a bid summary to the wrong data room. So you're not the only one.
Oh, well, good to know. I'm in famous company.
That's funny, but it actually stoked the fire of the other party to bid more.
Yes, but in this case, it looked like a deal move, which I'll take credit for.
Yeah, you look like a genius. It was all a part of a long con.
That's exactly right.
Okay, so if you could tell your younger self something knowing what you know today, what would you tell her?
Oh, man. Honestly, I think as a kid, I was like, oh, I don't want to do sales. I want to write the code, or, I want to build the model. I don't want to do sales. Like, every job is selling, so learn to sell. That's what I would tell myself.
Yeah, the older I get, I look at like a partner at a big four accounting firm. Their number one job is sales. Partner at a law firm, number one job is sales. CFO, you're selling the company to get talent, and also selling the company to raise money, really.
Yeah, exactly right.
Can you walk me through what you're using for your finance stack today?
Yeah, for sure. So we use NetSuite for our ERP.
Shout out NetSuite. We love NetSuite.
Yeah, I mean, honestly, NetSuite works great for us. We actually still do all of our forecasting in Excel, but we're testing out integrations between our data warehouse as well as Excel. So we use HighTouch basically to bring data from Looker into Excel. And we use Brex. You mentioned Michael.
Nice.
Brex is a partner. We use
friend
Brex
of the pod.
Cards. Yes. AP system, we use MineralTree. And I think, pretty much completes it.
What was the most recent tool you bought?
We're testing out another tool for automating data feeds into our model. The FP&A tool, we've tested so many. So the most recent project was actually just a dry run for a small tool called Aleph.
Yep.
But if you can solve the right FP&A tool for us, I'll give you a cookie. It's been a hard nut to crack.
You're gonna have a lot of inbound inquiries from FP&A vendors after this. I promise you that.
We've tested almost every single one, and frankly, I think we're a little too. We love our modeling too much, so we still live in Excel. But maybe that'll change.
And last one here. What's the craziest thing you've ever had someone try to expense?
No, that's funny. Again, not this job. Unnamed. I'm not going to name the job, but
that's fine.
Was someone who bought a gift for their partner and tried to pawn it up as a client gift. So
do you know what the gift was? Was it anything interesting?
It was it was a little bag. It was a cool little bag. It was green. I don't remember which bag it was. I remember seeing the gift. It was a green little bag. Did not succeed, by the way.
Didn't get through.
Did not get through. So.
Okay, that's a good one. My friend who's a CFO who listens to this podcast texted me because we did this segment last time, and he said that someone tried to expense a 9-piece jazz band that played at his Christmas party because one exec attended the party.
Oh my God! Okay, that's a good one. That one has me beat.
All right. Well, thank you so much for coming on, Shruti. Appreciate all the perspective and experience.
Yeah, thank you for having me. I love talking about public, and I love talking about this stuff.
Run the Numbers is a podcast from Turpentine, the network behind Moment of Zen, Econ 102, and more. If you like the episode, please leave us a review on Apple Podcasts or rate us on Spotify. Do it.